And I can't believe she's doing this. Okay. Did you hear that Cathie Wood is predicting that Tesla is going to go to $2,600 by 2029? All because of RoboTaxi? You got to be kidding me. You know, is she seriously? Is she serious? Or is she just trying to influence prices on something she already owns? Now, would Cathie Wood do that? Some of you know the truth. Anyway, before we jump into that, I want to basically kick over and ask the question, why in the world is the Russell falling apart? And as we take a look at the Russell as represented by the IWM right here, we know that the Russell has been the redheaded stepchild of all the indexes this year, as it was last year, and it basically continues to fall. Where is it likely to fall to? And what are we seeing here? We're seeing some really interesting things from my perspective. Is basically we broke structure last week, and then we continue to fall, hit this low here, and as is typical, bounce back up. And this is in the technical term called it bounced back up to kiss the trend goodbye, and it is basically falling. I'm looking at Tesla, at IWM to fall down into this box about there. Will it maintain itself above the 200-day moving average, which is currently at 192, or will it dive deeper? If this level over here on the weekly start just break at the 192 level, stand by. A larger correction could be in place. Also note on the weekly charts, guys, this is what's going on. This is one heck of a interesting, what kind of pattern is that? Head and shoulders. So anyway, that's what I'm looking at. And we're going to dig deeper into what's going on with the indexes because they're not all like this. But again, without the rates being lowered, the small caps are getting the snot beat out of them. So with that, let's go ahead and jump back over to this section. Welcome today to Trade Your Way to Freedom. I'm Dennis Wilborn, the AutoPilot Trader, and alongside me, Anil Parikh, the organizer for the Delaware IBD meetup group, and basically not the producer, but the one who developed the triple screen system. And he basically, Anil. So what do you think about, what have you been doing and how are you trading this market? We're at all-time highs. What the heck's going on?
Two answers. I'm not worried about all-time high as long as my system is giving me the right signals. So I'm trying to find stocks, strong stocks, who are giving me signals and let the market do whatever it wants to.
Okay. Well, and what about, there are influencers out there in the market, right? That try to influence us to emotionally buy and sell stuff. Oftentimes they have an ulterior motive for that. So how do you handle not getting caught up in that trap?
To be honest with you, sometimes I do get caught up in that trap. But if that happens, I again look at my signals and try to believe in that. But sometimes I admit, it's very tempting sometimes. But
without a doubt, yeah, because I had ChatGPT draw this graphic up, and I thought it was really kind of cool. Here's this mystic behind saying, "Hey, buy this right now," and of course, if he would just pay attention to, but price is king, and learn from that. I know when I first started trading, I faced many challenges, and just like many of us, many of you guys out there online, it wasn't easy to navigate the market noise, which much of it came from these influencers that wanted you to make decisions that were more favorable to them. We know that there are times when influencers try to drive up prices so that they can sell, and also drive down prices so they can buy. So you got to be really careful. And today we're going to share some of the strategies we use to overcome those hurdles. But hold on, we stay tuned because the stock picks today are absolutely phenomenal. I want to welcome everybody who's joining us. David, nice to see you. Hey, Redo, I haven't seen you around for a while, man. But David says the solution to Tesla is to buy call leaps. And Dave, I'm kind of leaning that way, and or buy. Oh, I'll save that. I'll tell you what might be a good alternative as we get into today's session. But first, let's talk about what's going on with the indexes. And I'll basically show you what I'm seeing. We talked about the Russell as represented by IWM. Let's take a look at the spiders representing the S&P. So I'm going to dig into this. I've got the weekly chart on the left and the daily chart on the right. We have broken out above the uptrending line to all new highs on the S&P and the spiders. I find this pattern very interesting. The reason I find it interesting is because this could very well easily turn into what's called an abandoned baby. If we get a gap back down, that is a hugely bearish indicator. What else do we have going on here? Well, I've got a shooting star followed by a hammer. Correction, but that's not a hammer, right? No, exactly right. That's a hanging man, a bearish reversal signal. What is my momentum telling me? It's telling me that I'm doing kind of a double top here, but as prices are reaching new highs, my momentum isn't. Same, even more strongly indicated over here on the weekly chart. Now, am I expecting this to just fall out of the sky? No, but we may get a retracement back into the 8-week moving average, or it may overshoot like it did here. And that's what I'd be looking for. Something into this area here, maybe about there. Let's find out what that number is. That number is approximately a pullback to about 520. And this is that low right there. We could also bounce back into the 50-day moving average or the 34. So somewhere around there, 530 or lower. We could get a bounce off of there for the S&P and the QQQs. What are they doing? Something very similar. As you can see, we broke out above the, and there's also, Neil, I think there's a trigger point that IBD looks for. If you break out the top of a channel line or a trend line, that oftentimes they consider that to be a bearish type of signal, that it is predictive of a significant pullback. We'll see if that happens, because right now, ever since the April 22nd, we've been on one heck of a really nice rally with the NASDAQ. Of course, that's driven by the AI, NVDA stock split. And so be interested, guys. Let us know. Are you currently trading NVDA? Just put a yes or no in the chat box. And also let me know where you're watching from. Let us know where you're watching from so that we can know what's going on. So, right now, I'm not touching, I'm neither buying any of the NASDAQ or anything, the NASDAQ or the S&P. We did enter a trade for the AutoPilot trading members on TQQ when we bounce off of this area here and this held as support. And so we've had a really nice run. So not trading on NVDA. No. Okay. Hey, Mike Norton. And I'm waiting for the big pullback. But indirect through TQQ is creating great. So let's go ahead and jump now over to, just a real quick, let me bounce this back here. In my early days of trading, finding the right entry system was always a constant struggle. And that's why I developed this. This is why I developed a PEP routine. It's helped me improve my batting average. It can help you clarify and simplify your approach to swing trading. So don't wait. I'll put a link down in the description on the YouTube channel on how you can get in on this training course. Now, let's take a look at where we're sitting. So right now, I'm on slope. I would like to see catching up. I'm behind schedule just slightly, hitting at about 15%. And I want to be about 20% by the end of June. And so we're progressing and moving in the right direction. No on NVDA. Hey, Tim. Excellent. So let's go ahead now, Anil, and jump over to the stocks we are both watching. Now, you started us off with, this is a really great pick. I like both of your picks this week. I just want to be able to write them down. There we go. Now, what is the story on Universal Display?
It's an old one, but coming back to life. And actually, it broke out recently. And so, and I looked at the fundamentals. They're excellent. I looked at my triple screen system, and that is excellent. And so that's what I picked.
Okay.
It's actually, it broke out a couple of days ago, and now today it is pulling back. So I'm getting interested.
Okay. Yeah, very classic move, isn't that? Where you get a breakout. And did everybody know that about 70% of all breakouts are followed by a pullback towards, doesn't have to get all the way to it, but towards the breakout zone? And so it's oftentimes really worth waiting for that pullback, because you can get a better wholesale price on the stock that you're trying to trade. Great. I like that. So I'm going to jump over, Anil, to a leverage ETF that I'm keeping my eye on. And as I said, we have been trading this. We've been trading this, and it's TQQQ. It is not ready to be bought right now. Okay. However, what I'll be looking for is I'll be looking for this pullback into approximately the 8-week moving average. And the 8-week moving average next week is going to be up about $65. And so as you can see, that's about $8. Yeah, about $8 below where we currently are. I also have this big gap. Now I'm paying attention to the big gap, because that we could get a similar type situation where if I pull back here and then gaps down, then all bets are off and I'll have to wait for a new setup. But on TQQ, I'm getting a nice push up to the upside, and it's playing with that upper channel box, a channel line. And so I'd be looking for price actions to get back to two places. One is the 8-day moving average, which on Monday will be about right there. And or the 8-week, as you can see right here, the 8-week next week will be about right there. And how am I getting those numbers? I'm just extending the current trend line of the 8-week moving average. It's going to be about there. And then I can basically take this and just move this up. And this is the way I target. Move back to about there. I mean, it's not an exact science. And it disappeared. Well, or it's still there. There we go. I'm going to have to move this up the other way, the old-fashioned way. So it's going to be about there. I'm going to click that into place, get rid of the drawing. Oh, there we go. Get rid of the drawing there. And as you can see, that 8-week, the 8-week should have been about right there. So I need to just adjust that down just a little bit. It's going to be about right there as of next week. And that's how I'll plan my trade around this, is I'll look for a pullback either to here or the 8-day moving average. Why do I want to trade TQQQ? I want to trade TQQQ because TQQQ has a history of moving about 4 to 6 times per year, enough where it compounds out at 70 to 100% for the year. And if I, take some, just think about it. Most people would just be happy with, 50% for the year. But this is the way I infuse more cash into my trading account. So TQQ, that's my choice, Anil. Thoughts?
So currently you are in TQQ or not at all?
Yeah, currently we are in TQQ. Let me give you a number on that. We entered TQQ at 61.35, which was down here. We basically put in this hammer. And so we got into it. It's right there as it came down and tested the midsection of that. So we are up currently on the pieces that we have left. We are up. I'll give you a number from about there up to there. Yeah, a little bit over 20%. We've already taken off significant profits, but I want to rebuild the position.
Nice. Okay.
So next up is, and this is the one I really an interesting stock. And it's a beauty part. It's a beauty product, right?
Right. It's Elf Beauty, cosmetic and personal care group in there, and it had done extremely well. It just building a new base, and right now it's about 4% to pivot. Meets my extremely tight screens.
Okay.
Meets Minervini criteria, and meets my triple screen criteria. Actually, I might be a little late picking it up according to the triple screen, but it's very interesting at this point.
So are you buying now, or does it have to do something else before you buy?
It's tempting because today itself it has come down about 3%.
Gotcha.
About 3.5% actually, and it's looks like it's finding support at the 8-day line. So I might get into it today.
Yeah, I really like. I mean, it's got a really great pattern, and I agree with you that right off that 8-day moving line, on that, if you get into the 8 or approximately at the 8, you're about 7% potential below the, if it drops below the 50 or wherever you want to put your stops in. But I like it, Anil. That's let's see if it continues, because momentum both on the weekly and the daily have shifted back up to the upside. So I like it. So my next pick is this Tesla, TSLA. Now, part of the reason I want to choose Tesla today is basically because of this. If you only read the headlines that IBD listed on this, because it says that Cathie Wood says that, on June 12th, that Tesla's stock target is $2,600 by 2029. Well, you need to read the rest of the story and get down into the guts of this, because here is really where they expect in the short term for Tesla to go. Now, that's nothing to sneeze about, because if it goes from the 170 or 180 that it's at right now, up $350 to $350 per share over the next 12 months, that's almost 100% return. So that's an excellent aspect. But if you read this, the reason she gives 2,600 is because she's bullish. Okay, this is an opinion, and we all know what opinions are like. And I'm not going to get into the grossness of what opinion is like, but she has long been bullish on Tesla's autonomy push, which means RoboTaxis. And I don't know. I'm just not buying it yet, guys. I'm just not buying it. What about you? What do you think? Will RoboTaxis push Tesla up to $2,600 a share? If you think yes, type a Y down in the chat box if you would. Don't be a ghost, and so just drop a Y or a no down in the chat box if you would. So I haven't got to the chart yet, Anil, but this is pretty good advice to, when you see a headline that says this, dig deeper. Yeah? You agree?
Yeah, I agree.
Okay. So let's take a look at the chart itself. Oh, that'd be funny. Let's see. There we go. Yeah, let's go to Tesla. So here's what I'm seeing with Tesla right now, folks, is basically Tesla's in a longer term downtrend. We know that. It's been that way for quite a while now. Downtrend when you go to the monthly chart. However, it is starting to do something constructive here and build a new consolidation pattern. Now, where do I like it with the consolidation pattern? I like Tesla to start nibbling on it somewhere between right here, let's say 176, which it almost made it today, all the way down to 169 to 170. Note, Tesla, Mark Minervini wouldn't invest in Tesla, right? Because here's the 200-day moving average. It's below the 200-day moving average. However, with that said, we know that it will start working its way. If you go below the 200-day moving average, you have to get a bullish consolidation and then start pushing up. And it'll probably bump its head up here. But where's Cathie Wood's current target? What we say, 350. That's up here. Is that reasonable? Is that achievable? Probably. But how much you going to bite off? If I were to buy Tesla at either of those positions, I would maintain a stop. Let's say I'm doing it for the long term. I would buy it and maintain at least a 10 to 15% stop loss on it, just simply because you never know. We never know. We just don't know. Now, what is the other entity I want to take a look at real quick? It is it is TSLA. This is the 2-time leverage ETF of Tesla, and it moves twice as much as Tesla does. I really like this one. If you have a small account where you can't go in and go for some full size on Tesla, this is an excellent opportunity here. Again, just apply the same areas. Like if I get down into about $7, I would entertain buying it, because then my stop loss would be here about 5% away. Also, TSLA has leverage, or not leverage, but weekly options. So again, there's two opportunities for you on Tesla. Again, I wouldn't jump all the way in. So what's your triple screen saying about Tesla, Neil?
Triple screen, actually, on the daily triple screen, it has a buy signal today, but it does not meet my other fundamental criteria, uh, particularly the up-down volume ratio. It's not. I would like to have it more. Currently, it's at 1, which is not bad.
Yeah.
And the accumulation distribution is also B plus, which is good.
Right.
But I'd like a little more confirmation.
I
Like
agree.
yeah,
I'm sorry, go ahead.
like the 200-day moving average. I kind of lean towards what Mark Minervini is talking about. For him, it's non-negotiable, and I can violate that if my SMR rating, accumulation distribution, and up-down volume ratio all say that it's good, even below 200, then I might consider. But right now, I might wait a little.
Yeah, because you got to remember that 200-day moving average is about 17% away.
Yeah.
And I agree with everything that you said, Anil. The thing that I watch Tesla every week, and what I've been noticing is that its fundamentals have been slowly improving.
Yep, that's right.
But at the same time, we all have to have our line in the sand. As far as, that's why you need trading rules to basically say, okay, these are the places where I will either, trade it, or if it doesn't match those, I'm not going to trade it at all. So great stock picks today, Anil.
Thank you.
And so, hey, I hope you have, at least if you have one major takeaway in today's session or one stock that you would like to trade, please let us know. Please leave a note. Just type that in the chat box. I'd really appreciate that. What's one takeaway that you came away from with today's session, and or what stock would you like to trade? So always get the rest of the story. That's basically the essence of the big takeaway I would like for you to have, and trade the chart in front of you. And if you don't have it yet, get a tattoo on your left arm or on your mouse hand that says "Price is King." Yeah, I'm not going to get the tattoo either, but I will make sure that that note is on my computer. So if you found today's session valuable, don't forget to subscribe, share this video with fellow traders, and check the description link to everything else that we've discussed. So thanks for joining our community and helping you navigate as we navigate the system together. And Anil, thank you so much.
Thank you.
It's always a pleasure. And everybody else, aloha, God bless. And we'll catch up with you next Friday. And also Monday, don't forget the podcast Trading Truths that I do with Mike Lamont. And the only thing I have left to do today, guys, is read the disclaimer. So we'll see you in the next hour. So, hey, remember, everybody, all the materials we present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. So hang on, Anil. I'm going to end the live stream. Good day, everybody.